Governments always say, we are working for your financial freedom. They talk about stability, growth, and opportunity. But if you look a little closer, you'll see that the stories have much darker sides. Throughout history, governments have played all kinds of financial games to keep people poor while keeping wealth and power in their own hands. And you might be surprised, but these games aren't new. For centuries, it's been the same stories, just repackaged with new names and new wrapping. The goal is always the same. Those at the top win, while the majority and the poor remain dependent. The oldest trick, inflation. When a government spends more than it earns, it has two choices. It can be honest and openly ask people for more taxes, but that's politically risky. Or it can quietly reduce the value of money. One of the first to discover this trick was the Roman Empire. Emperors began to reduce the silver content in their coins to cover war expenses. Coins that were once pure silver eventually became almost entirely copper. But the empire said, nothing has changed. The result? People's savings were destroyed. Prices soared, wages fell short, and savings evaporated. Everyone was silently taxed, without even realizing it. Today, the same tricks are played under the name central banks. The only difference, instead of metal coins, they now print digital money. The Middle Ages trick, forced loans. In the past, kings told merchants, lend money for your country. But this wasn't a request, refuse, and your property was seized. Repayment? Maybe, but often late, with devalued money, or never at all. The state built its palaces and fought its wars, while the people lost everything. In short, coercion was disguised as patriotism. The modernized trick, government debt. In 1694, England established the Bank of England. The reason was simple, to finance wars with France. Wealthy investors lent money to the government, and in return, the state promised them interest. But where did the money to pay that interest come from? From the people, through taxes on things like salt, beer, and cloth. So the system worked like this. The rich lent money to the government, and the people paid the interest on those loans. Back then, it was called national finance. Today, we call it the bond market. Same game, different name. The present day, debt, bailouts, and inflation. Today, governments take on massive debts. They say it's for investment, employment, and welfare. But most of the money goes to defense companies, large corporations, and banks. When it's time to repay, what do? They raise taxes, cut benefits, and devalue the currency. The debt looks like it's for the people, but the bill always lands on the people's shoulders. Remember the 2008 crisis? Banks were on the verge of collapse, and the government bailed them out. With whose money? Ours, the taxpayers. And what happened afterward? The same banks became even richer. Same game again. Profits are private, losses are public. The retirement game. You work for years thinking the deductions from your paycheck are securing your retirement. But that money is actually already spent. All that's left in the fund are IOUs saying, we'll pay it back one day. It's a government-backed Ponzi scheme. The new generation pays for the old. When the population ages, the system collapses. And then they call it reform while cutting pensions and raising the retirement age. Same tactic. Everywhere controlling perception and inflation. Inflation is called growth. Debt is called investment. Bailouts are called stability. Pension cuts are called reform. Change the word, but the result is always the same. The rich win, the people lose. Old games in the new age. Quantitative easing, or money printing, was actually designed to protect the wealthy. Billions were created and pumped into the markets. Asset prices skyrocketed. But who owned most of those assets? The rich. The middle class just carried the weight of rising costs. There are also hidden taxes, VAT, fuel taxes, inflation. Your salary may look higher, but your purchasing power keeps falling. That difference is a silent tax. The unchanging result, history doesn't change. Only the stage does. In Rome, money lost its value and people became poor. In the Middle Ages, there were forced loans. Today, it's debt, inflation, and bailouts. The same story. The game is the same, only the names have changed. What can you do? Don't fall for headlines. When they announce a relief package, check whose pockets it really fills. Create real value. Go beyond money. Invest in lasting assets. Don't trust the system. The system protects itself, not you. They say history doesn't repeat, but if you don't understand it, it will crush you all the same. The tricks that impoverish the people of Rome are still being played today. The only difference is whether or not you notice them. If this gave you a new perspective, follow an Elam.